We've been hearing a lot about upsizing lately. Proven Investments, DERRIMON Trading, and SYGNUS all upsized their APOs in the past few weeks. But what does this mean, and is it something good? Hey money makers, I'm Kalila Reynolds, and it's time for another episode of Money Mondays JA, brought to you by Proven Wealth. Before we get started, don't forget to like this video, subscribe to this channel, and click the bell icon so you can be notified whenever there is a new video. Also subscribe to my newsletter at KalilaReynolds.com, where you can read a full transcript of this episode. So about that upsizing, let's use SYGNUS as a recent example. SCI had a target of raising 22 million US dollars. That's about 3.3 billion Jamaican dollars. They planned to do this by selling 196 million new ordinary shares in the company. But investors were hungry for the shares, and they offered to buy more than what SYGNUS was actually selling. SYGNUS received offers worth more than 27 million US dollars, or nearly 4 billion Jamaican dollars. This is what they mean when they say an offer is oversubscribed. So what happens then? Do they just leave that extra 5 million US on the table? They could, or they could upsize. Now, because the JSE has been so hot in the past few years, oversubscription has become quite common. So many companies have come to anticipate this, and rather than leave that extra money on the table, they write a provision in the prospectus that they can opt to upsize the offer, meaning offer more shares for sale. They can do this especially with APOs and IPOs because the companies have created new shares. Theoretically, they can create unlimited shares and sell them, but you know what happens with supply and demand. If there are too many shares, each share is worth less. If you have an infinite number of shares, it's basically worthless. So companies have to decide on a limited number of shares that they're going to sell. And in these recent instances, what they've done is say, well, we'll sell X number of new shares, but if there are a lot of buyers, we'll sell a bit more so we can collect some of that extra money. In SCI's case, they increased their share offering by 54% to 240 million new ordinary shares. Proven Investments did the same thing. They started out with an offer for 89 million shares, but they reserved the right to offer an extra 45 million. They received heavy demand in just the first 3 days, and they too decided to upsize and sell additional shares in order to accept more money. So why don't companies just put the upsized amount as their target in the first place? Well, I think it has a bit to do with perception and marketing. If you listen to the principals of these companies speak, they often do refer to the upsized amount as their real goal. But it is a risk, because if you set a very high target and you don't meet that offer, then you might see, or people might see the offer as a failure. If you set a lower target and exceed it, then upsize to meet the excess demand, then that's perceived as a win, because even if you don't meet the full upsize target, you still exceeded your initial target. Get it? Now, before buying shares in any APO or IPO, it's very important to read the prospectus. This is put out in advance of the offer's open date. Here's an example from SCI's prospectus. It gives you details such as the registration and publication date, along with the open and close date. Also, you get the share price offerings and the conditions if oversubscribed. And here we see the statement showing the right for the company to upsize. But is there a downside to this upsizing? Well, it goes back to what I was saying earlier about supply and demand. The more additional shares that are created in the company will dilute the holdings of other shareholders. So let's look at the DERRIMON APO prospectus as an example. You see here that founder and CEO Derek Cottrell owns 1.1 million shares in DERRIMON, which amounts to about 40% of the company. But after the APO, because additional shares have been created, His same 1.1 million shares are now only 26% of the company. This is called being diluted. So if Derek wants to maintain his 40% shareholdings, he'd have to buy additional shares in the APO. And this becomes important for large shareholders because of the level of control they have in the company. A certain percentage may give you a seat at the board, for example. And if you become too diluted, you could lose that. There may also be other benefits to having a certain percentage ownership. Now here's another thing about upsizing that may affect more of the smaller investors. Like I explained earlier, when an offer is oversubscribed, it means there are not enough shares to meet the demand, and this means that you might not get the full amount of shares that you applied for. In that case, you have to wait on the basis of allotment to be announced. This tells you how the company will distribute the shares based on the amount of persons who applied. Again, here's SCI's basis of allotment posted on the JSC's website. Here we see the document instructing how the allocations would be made and also addressing refunds for those who didn't get the full amount they applied for. Because obviously, if you ordered and paid for 5 items, but the person selling can only supply 4, then they have to refund you for the one that you didn't get. Well, that's it for today's episode of Money Mondays JA, brought to you by Proven Wealth. Follow them on social media at We Are Proven and visit their website, provenwealth.com, to open an investment account today. Now here's what's coming up on Taking Stock.
The BPO sector was one of the worst hit in the early stages of the pandemic. Following an outbreak of COVID-19 at the Alorica call center, some had to close temporarily, and tight social distancing restrictions were imposed. But now, BPOs have pivoted and are doing well. CEO of ITEL BPO, Yoni Epstein, will tell us about his expansion plans in the region. And later, the analysts weigh in on the latest market developments. The GameStop short squeeze is all the talk on the US markets. Their stock soared last week as Reddit users took on Wall Street. We'll break it all down.
Don't forget to like this video, subscribe to my channel and newsletter. You can click the link in the description box below. Follow me on Instagram and Twitter at Kalila Ray. I'm Kalila Reynolds. Stay safe.